Hi everybody, this is Cash Rocket from Twitter, and I'm doing a video on the volatility stop indicator. Lately, I've received some increased interest from other traders on Twitter asking, what is the volatility stop indicator? How do you use it, and how can it improve my trading? And the answer to that is fairly straightforward. First of all, I would like to always emphasize that the volatility stop indicator is to be used in conjunction with traditional technical analysis tools such as support and resistance, moving averages, volume, gaps in either direction. The volatility stop indicator, when used in conjunction with those other features, can be a powerful tool to help you better time your entries and exits, whether buying, shorting, or selling a stock or option. The volatility stop indicator may not necessarily be available on all platforms. I don't know what everybody out there uses, but I personally like to use freestockcharts.com up here. I like the website for a variety of reasons, and one of those reasons happens to be that it offers this indicator called the volatility stop. The default settings that I use are 20 and 2.0, which is a function of a feature called the average true range, which I know is another feature of technical analysis that basically expands or contracts depending on the price action of an individual stock. But in a nutshell, what we're really talking about using the volatility stop is that when you see a switch, I like to call it a switch, perhaps there's another term for it, but when you see a switch that in this case is denoted from a switch from a gray circle to an orange circle, or an orange circle to a gray circle, for example over here, what that means is that the stock is sort of, let's call it, exhibiting different behavior and is starting to break out of a range. When that range breaks out either to the downside, we call that a volatility stop sell signal, and conversely, when it breaks out to the upside, that would be called a volatility stop buy signal. And the whole purpose there is that once you receive that signal, you will ideally remain in that trade for longer than you might normally, particularly if you are a swing trader, and by staying in that trend longer, you can capture additional points to the upside or downside you might not have previously because of other signals such as, a MACD that went red, or an RSI that went overbought, or a bullish engulfing day when the stock is still in a volatility stop sell pattern. So there's so many different signals and noise that are out there that I find that using this can really cut down on the amount of trades you might make when trying to, hit the big one. And I think really the best way to describe the effectiveness or the efficacy of this signal is best shown by example. And one stock I found to best illustrate this is something called Sempra Energy, and it's a utility stock, and there's nothing really particularly interesting about Sempra. You could just as well substitute Apple, Google, Cliffs Natural, Ford, the XLF. I don't really care what sector, I don't care if it's a stock. The whole point here is that we're trying to find trends that can be ridden for some time and hopefully make some money on. So let's go back to October 2012, and what we can see here is that Sempra Energy had been in a volatility stop sell signal, which means it was trending along below these gray dots, which means that, and not only is it trending below the gray dots, but it's trending below its 20 EMA and also the 10 SMA for a period of a reasonable amount of time. And then on October the 3rd, you've got this volatility stop buy signal. I like to call that the VSB on Twitter. And what that means is the stock had broken out of this range proceeding for about call it the previous 2 or 3 weeks, and it broke out of it to the point where the average true range expanded enough and it moved up with enough force that the behavior of the stock had changed, and now it was considered to be a buy. And this is for a swing trade. We're on a daily chart. So let's imagine you had taken this to the long side. Now, your actual entry price is not here at that orange circle area, but actually at the area where the volatility stop area is right about there. And about that price, call that 65 and a half. At that point, the volatility stop indicator, the gray circle, now becomes an orange circle down there, and this is your actual entry point denoted by the purple line. At that point, your new stop is going to be one of two things. It's either going to be a break below the volatility stop buy indicator, which is the next orange circle and the one after that, or potentially a break of the previous low of the day. There's a variety of ways you can, stop out of a stock, 1%, 3%, 8% IBD style. Personally though, if you're going to be using the volatility stop, these little circles for an entry, you should be using it as an exit as well. That's the point of the whole system. So going forward, your entry is approximately 65 and change, and you remain in the stock as long as you see this sort of orange circle remaining, which is sort of guiding the price action in a slow but steady uptrend. So if we move a little bit forward, finally on November the 5th, 2012, you've been in the stock for about a month, and then you see the stock here broke below, and I mean it was on low volume, but nevertheless it did break below this what was determined to be the stop out based on the volatility stop indicator. And not only that, also broke through the 10 MA, the 5 MA, comes close to breaking the 20 MA, and you can use those in conjunction with the vol stop or not. I'm going here strictly based on the volatility stop indicator itself. And in fact, if we want to make this really simplified, I'll just go and remove all the moving averages altogether, because this video is really meant to be just a tutorial on the volatility stop indicator and nothing else. So why don't we remove all of those, and we'll get a really true sense of how effective this indicator actually is. Okay? So your entry was at about 65 and change. You stopped out, not at the top of the bar, not at the bottom of the bar, but at approximately where you would see this switch over from a buy to a sell. And let's call that 68 and change. So hey, not bad. You made about a few bucks on a stock in a month. On a $60-some stock in about a month's time, I don't know, what is that, 5%? Not bad. So let's move forward. Now you've got the volatility stop sell signal. Now at that point you could say, you know what, I'm a long bias trader. I don't want any piece of this until it goes back into VSB mode, volatility stop buy mode. Or if you want to be more aggressive, you could say, well, let's short this puppy. Let's go the other way. You could short the stock. You could buy puts. Maybe you just want to sell covered calls against a pre-existing long position. You could sell a bear call spread. You could buy a put spread. Whatever you want to do, all this is telling you is that something has now changed to the downside. So let's go forward in time a little bit. The stock is now in volatility stop sell mode and remained that way until November 28th. So your entry point for a short was at approximately 68 and change, and you would have had your vol stop buy signal at approximately 67 and change. So you only gained about a buck on that one. But of course, you could have taken profits anywhere along the way. Yet again, I am recommending if you enter on the circle, you exit on the circle. You don't just sort of take profits or stop out wherever you want along the way. That's not the point of the system. What would have been, though, a key that perhaps the signal might be coming closer to an end, you could see right around here, there was a bullish engulfing day at the 65 area. That isn't all that exciting to me. If I'm short the stock and next thing I see is a bullish engulfing bar the next day, I might be wise to at least reduce my position, not fully, cover it entirely, but I might want to consider saying, hey, maybe, you know what, maybe I'm getting a little too excited here on the downside. I captured a few points in just a couple of weeks. You can take your profits and run, or at least, shave your position down. Anyways, so we're back in the vol stop buy. I'm going to just get rid of this line for clarity. Now we're back in a vol stop buy mode, and again, even though the circle is down here, your entry point is actually where the signal would trigger the vol stop buy, which is about where those gray circles are. So let's call that 67 and change. Call it 67.19, right about there. We're now in a vol stop buy. Let's see how long this lasts for. Not bad. So you caught this nice move right over here, and then it consolidated sideways for a little while. You caught another nice high volume move there. Now you can see after that, 1, 2, 3, 4, 5, 6, after this move on December the 17th, it sort of lost its mojo, and you could have said, you know what, 1 day, 2 days, 3 days, 4 days, 5 days, the stock is giving back all of its gains. I just want to get out of the stock. You can do that, but again, if you had done that over here, where the stock had moved up on nice volume and then consolidated sideways and thought, hey, this isn't doing anything, I want to get out. That's not the point of the system. The point of the system is you enter on the vol stop buy signal, you exit on the vol stop sell signal. Your entry point is approximately 66 and change. Your exit point is right around here. Again, for clarity, you do not exit when you see the gray circle. That's not your exit. Your exit's over here. Your entry was at 66 and change. You exited approximately 71. Not bad, soldier. You made yourself about $5 in a month. Nice move. You ignored the noise. You ignored stochastics and RSI and ATRs and ADX and vol by price and gaps and whatnot. You just followed the circles, and that's the whole point of the system here. And you can see just over the last few time periods here, each of these lasts for about a month or so. So it's not something where you have to worry that you buy and then 2 days later you're stopped out and then 3 days later it flips again and all of a sudden you're just running in circles. That does happen, but I wanted to use this stock as an example of a typical scenario where if that doesn't happen, you can capture nice profits to the long side and to the short side and not be chopped around too badly and actually capture some points along the way. And you don't have to be biased to the long side or the short side. You're just following the system. Now, in reference to my previous point, you can actually see here that there was this vol stop sell signal generated here, and actually just 3 days later, it did actually convert to a vol stop buy. But if you look at your entry point, which would have been a short, around $71, you would have covered, well, now you're short, so you're covering right around here. So about $1. You lost about $1 on this trade. Not horrible. Actually, let me rephrase that. When the stock gapped up to this area, which is your vol stop sell signal, let's call it 72. So if you went short at about 71 and covered at about 72, let's call it here, yeah, you lost about $1. Not the greatest, but that's part of the thing that comes with trading, right? Is not every trade will be a winner, but you want to hopefully have your winners more than outweigh your losers, both in quality and quantity. Anyways, you're now in a buy signal, the beginning of 2013, let's call it 72 and change, and just after you had bought it, you can see how the stock actually pulled back to the VSB signal. Not enough to stop you out, but definitely enough to keep you concerned. So even though we saw this big red day, the stock didn't actually go VSS, vol stop sell signal, just yet. So if you want to actually be really conservative, one technique you can do is wait for a stock to go vol stop buy, and instead of just buying it that day, wait for a pullback, because there's now going to be this sort of new range you can trade against. And once it comes back to the orange circle, if you decide to buy there and it turns into a VSS the next day, you actually have fractional losses. So that's one technique. Or what I think is just a lot more simple is simply buy when the circles switch colors and then hold it as long as it stays orange until it goes gray again. And by the way, orange and gray are just the colors that I chose. You can pick whatever you want. Anyways, we're now in a vol stop buy signal. And how long could we have ridden this for? Folks, we are still in a vol stop buy signal. So I'm going to get rid of these purple lines here and just show you that on January 2nd, 2013, this stock went vol stop buy at approximately low 70s, 72 let's call it. And the stock is now at 82 and change. So you've gained a full 10 points on this, and you haven't done a whole lot to manage the position other than watching for that dreaded gray circle. You do notice that about mid-trend, there was this bearish engulfing day that I've got highlighted by this oval here. However, it was on relatively low volume, so not that much to be concerned about, but certainly if you're a more conservative trader, you could certainly sell half your position and let the rest ride. Or, as I recommend yet again, until the stock goes to the gray circle, you got to stick with it. Now, as Paul Wall mentioned to me earlier in the day we were talking about, if there is a catalyst coming up, for example, biotech stock, like one of those FDA panels, or if it's an earnings event, or perhaps a big news conference or something like that, ahead of a sort of a binary event like that, you might not want to ride this trend for as long as you can, just because, why risk it all to a gap down? And I can't disagree with that. If you're comfortable taking profits along the way, every 5 points up, take a quarter off, something to that effect, be my guest. The whole point of this video is just to show you that if you're able to sort of account for all of those events that may occur along the way, but are disciplined enough to stick with the volatility stop trend, you can score some massive profits. So again, to reiterate, beginning of January, here we are now, beginning of April. It's been a full 3 months, and you are still ideally in the stock. The stock chopped along sideways for a little while, through March. Nothing to be concerned about, certainly a little boring. And in fact, if you were long, let's call it calls, you do have to worry about things like volatility decay, time decay. But if you're potentially in deep in the money calls, maybe back months, maybe 3, 6, some months out, and theta isn't killing you too badly, you could substitute stocks and buy calls instead. But this is open to interpretation. I do also want to point out here that after that bearish engulfing day, you can actually see that the stock started to re-accelerate again to the upside with increased volume as well. So again, using other technical analysis tools in conjunction with the vol stop, such as volume, that helped to confirm that, what, I better maybe stick with this trend. Buyers are still coming into this. So if I sort of zoom out now on a 1-year time frame, let's sort of reiterate what happened here. Oh, and there's another vol stop sell signal that we can use to further summarize whether this tool is worth incorporating into your trading regimen or not. You captured a short position from here to here, nice several points. You captured a buy from here to here, not bad. You captured a short from here to here, made a few bucks. You captured a buy signal from here to here, you made quite a few dollars on that little trade. There was some choppiness here, and that was probably a loss of about $1. And then you captured the buy from the low 70s all the way up until the 80s. So let's call that 1, 2, 3, 4, 5, and 6 trades. 5 out of 6 trades winners vastly outperform the losers. I think this is a really nice example of how the volatility stop indicator, if you are disciplined and patient and willing to stay with the trend longer than you might think possible, then by all means, this is something to think about. And to recap, not every stock out there shows such clean trends. That's one of the reasons I chose Sempra Energy, is to show you that if a stock is not too choppy and trading in too much of a sideways mode, it won't generate an excessive number of volatility stop, buy, and sell signals. But if you can find a stock that just converted to a vol stop buy or just converted to a vol stop sell, hey, you know what? It might be worth your time to take the trade. And if you get stopped out a little while later, so be it. But when you catch the big trend, which inevitably will happen, you'll be thanking yourself. I mean, think about it. Wouldn't it be worth it to catch a trend like this, to go through a little bit of pain once in a while? Wouldn't you be willing to risk 1, 2, or even 3% a couple of times in order to make a double-digit return on your next trade? It's entirely doable. Every one of these trades was a winner. You just had to take the signals. That's all I'm going to say about it for this video. I hope you learned something. I hope you found it enjoyable and educational. And I'm happy to do more posts in the future on this topic if anyone is interested. Good luck trading, and we'll talk to you later. Goodbye.